Section 1. View on Daily Chart. Looking at the daily chart, we can clearly see we were sitting near recent highs. Price had been consolidating up here for several sessions. No clean breakout, no clean breakdown, just compression. On the daily time frame, momentum was slowing. Candles were showing hesitation. Wicks were getting longer. Buyers were not pushing with conviction. That tells us something important. When price stalls near highs without strong continuation, liquidity builds underneath. That liquidity becomes fuel. Section 2. From open to 9:30 CST. Now let's move to the intraday session. At the open, we did not immediately collapse. Instead, we got early hesitation, minor bounce attempts, some structure forming. That early structure is dangerous because it creates the illusion of stability. Then came the drop. Fast, aggressive, large red candles with momentum. This is where psychology kicks in. When traders see strong red candles, momentum building, break of early levels, they assume continuation. And that's when many jump in, including me. Section 3. The trap. Fomo entry. Here's what happened technically. The drop was extended. We were already far from equilibrium. But emotionally, it felt like, if I don't enter now, I'll miss the move. That is FOMO talking. So I entered. SPX3 contracts at 835 each 0 DTE. Momentum trade. But here's the problem. The market had already flushed week longs. Liquidity was taken. Now it needed to rebalance. And that's when the reversal started. Slow at first, then stronger. Green candles stacking, shorts getting squeezed, bullish momentum kicked, and suddenly, the trade that looked perfect turned against me. I closed at 335 at a $1,500 loss. It might come back, but the loss is going to be exponential by the time it comes, so I exited. Not because the setup didn't exist, but because the entry timing was emotional. Section 4. How it pulled traders. Let's talk about what the market did brilliantly today. It dropped aggressively, built panic, encouraged momentum shorts, then reversed into them. This is liquidity engineering. The market creates fear, forces decisions, then punishes late entries. The reversal wasn't random. It came after exhaustion candles, momentum, divergence, overextension from VWAP, if applicable, emotional volume spike. That's not a breakout. That's a flush. Section 5. Lesson. Here's the real lesson. The daily chart told us we were in a sensitive zone. Intraday action told us the move was extended, but emotion told me, don't miss it. And that cost me $1,500. Same old FOMO. The market didn't beat me. Impatience did. Tomorrow, I wait. I let the third candle confirm. I let structure build. I trade the plan, not the emotion. Because consistency doesn't come from catching every move. It comes from surviving the traps. If you want, next message you can. Add your exact entry and exit details. Tell me what time frame you were watching. Share if this was 0 DTE or 1 DTE. Tell me what the MACD was doing. And I'll refine this script to be even sharper and aligned with your 3-candle edge TM methodology. 10:25 CST update. Micro pullback is forming. All right, quick real-time update. As of 10:25 CST, I'm watching the 1-hour candles closely because something important is shaping up. All the indexes are starting to form what looks like a pullback, close to 50% pullback setup on the 1HR chart. Meaning, we had a strong directional candle, followed by a smaller hesitation, pullback candle. And now we're at the point where the next candle could confirm direction. Now DJI, Dow, is not fully showing the same pattern yet, but it often lags, and it can still end up matching the same structure. So here's the key. The next 1HR candle's first 15-30 minutes matters. That initial 15 to 30 minutes move on. The next 1HR candle will usually give you the clue for where the candle is headed by the close, because that early move often sets the tone. Either it follows through with momentum, or it fails and reverses. So at this point, there are 3 outcomes we can face. The 3 possible outcomes. Explain on screen with your first, second, third graphic. Outcome 1. Bullish follow-through, green third candle. The third candle goes green, pushes up, and we get continuation. That would mean buyers defended the pullback and were likely grinding higher again, possibly another bullish day, but with some struggle because we're near highs. ATH, pressure. Outcome 2, fake pop, then stall, indecision third candle. The third candle starts green early, but stalls. This is the dangerous one. It pulls traders in early, then pauses, and the close becomes weak or flat. If you see this, it's a warning. The market is not ready to trend cleanly. Outcome 3, bearish confirmation, red third candle. This is the one I'm watching for. If the market is truly weak today, then the third candle should turn red and show the bearish push on the 1HR timeframe. That would confirm the pullback was just a pause, and the real direction is down. And this matches what I'm expecting. Why I'm expecting lower by EOD, daily candle context. Now here's my directional bias. I'm expecting the market to go lower by end of day on the daily candle. And if that's going to happen, the 1HR candles have to show it first, especially through outcome 3, the third red candle confirmation. My reasoning is simple. When I look at the last few days on each index, we had a strong bullish push, buyers in control, then the last 2 days showed weakness, not a clean breakdown, but a slowing. And now today becomes the third day where that weakness can actually expand. When markets go strong up and then slow down for 2 days, the third day is often where you either get continuation or the pullback becomes real. If the weakness confirms, you often see a move down to a meaningful retrace zone. Expected range if weakness confirms. If this turns into a real pullback day, we could see markets pull back around 18% to 32% of the previous swing move. Not a crash prediction, just a normal retrace range that markets often hit when momentum cools off. But if this does not confirm, then it's likely another bullish day with a little struggle, trying to grind higher from the all-time high area. Closing line for this segment. So my plan is not to guess. My plan is to wait for the third candle to prove it. And the next 1HR candle's first 15-30 minutes will tell us which outcome we're living in today. If you want, I can also turn your 3 outcomes graphic into a clean YouTube overlay version. Outcome 1, bullish. Outcome 2, trap, stall. Outcome 3, bearish confirmation. Just tell me, do you want the labels in white only or color-coded green-red for each outcome?